please don't assume, therefore, that it's not still being manipulated. And I would sell my Bitcoin right into this rally. And believe me, I had been a believer one time in Bitcoin. Not here, not now.
GM, and welcome back to the channel for this, an update on the markets going into the CPI later today in just a few hours time. So Kramer's saying to sell your Bitcoin. We'll look at the charts just here. You can see BTC moving towards that blue line. That is the range high for now, around $25,200, currently at 24,730 we just ticked up to. So Bitcoin showing some real strength here going into this CPI data. It's kind of been telegraphed by Biden and others that this may be a decent print in terms of it coming in a bit softer than last month. So we'll have a little look at that kind of stuff as well and what some of the banks are predicting for today. Before I do go any further, please ensure you subscribe to the channel if you're new around here. I've also got a Sway, which is the kind of Uniswap of the Fuel network video, and almost an airdrop hunting guide coming out in just a few hours time as well. So if that floats your boat more than this type of content, you may be interested in subscribing for that. So as we continue here with the BTC analysis, this was the range low. The CME gap was around this median area at 19,800 and change, and a quick dip down towards this, but that was bought up extremely aggressively here, and we're starting to see some real momentum in the market. But this is definitely going to be due to this lack of faith in the banking system and people fleeing to safe haven assets right now. You can see this with Bitcoin, of course, the digital version of gold, but gold itself as well, having a real big move over the last 3 days with that banking crisis and the kind of bailout measures in place by the Fed. So with Bitcoin going up, gold going up, you can see this general narrative of safe haven stores of value definitely getting some aggressive bid here. Now, why is the data today important? Well, as you look at the calendar here, March 21st, 22nd, that is next week when the FOMC deliberate and then deliver their conclusions from all the data that they've been presiding over the last couple of days. But you can see there is then no meeting until May 2nd, 3rd. So a full 6-week period there. So whatever guidance that Jerome and co put out is obviously going to affect the markets over a decently long period of time there. So this could really set things up for either a sustained rally if things come out softer in terms of the inflation prints and maybe more dovish from Jerome, or to the flip side, if we get a surprise to the upside, of course, this could be a very hawkish tone that Jerome has to put out yet again. They've kind of already backstopped the banks as well, so maybe they can be more aggressive with the rate hikes. But of course, we know that it is the actual interest rate raises, the quick succession of which have caused the issues in the banking sector as well. So a real rock and a hard place scenario for the Fed here. But this, of course, going to be a very important time frame here for the wider markets. So these are the CPI day expectations. The month over month expected for today is 0.4%. It was 0.5% last month. 6% is the CPI year over year expectation for today, down from 6.4 from last month. So we're looking for a print of 6 or less today, ideally. Then core month over month, 0.4 and 0.4. And then the year over year, 5.5 is expected. 5.6 was the prior. Now, this person tweeted out bears couldn't bring the SPX, that is the S&P 500, below 3,800 under record volume and headlines. So if we're flat or below any of these figures, it should be good. But if we do look at the SPX here, you can see from the blue trend line here, we have broken below it and we started to close below it as well. So this is obviously a bearish signal. This person saying, look, there's some flat horizontal areas around here, around 3,800, which we haven't broken below. So this kind of having a bit of a bullish sway on that. But overall, I would suggest the stocks do not look good below this kind of region here. So again, playing into the CPI data, if it comes in soft, maybe we can start to close back above here. But if there's more issues within the banking sector, well, of course, that will cause more issues for many of the stocks and thus downward pressure on the SPX here. So yes, of course, a big week. In terms of the data today as well, these are the major banking institutions and what they believe CPI will come in at. 6% is the median, most of them going for 6%. We've got a few 6.1s in the mix there and a few 6.2s as well. Some really strange data coming out as well, how quickly things can change in this market. So with that banking crisis, what we're seeing now is experts suggest that the Fed has raised too high and they will actually have to cut. So we think back just 4 or 5 days ago when 50 bips was on the table. We're now looking at a potential 25 basis points cut, says Nomura. That is the research analysts at the North American economics. I think this is too far the other way personally, and this is certainly not being priced in at all by the markets. If we go over to the CME Fed watch here, 27% chance of a 0% rate hike, i.e. keeping things flat here, 72% chance of 25 basis points. Of course, these will change as the CPI data is released in just around 2 hours from filming now. Over to this from Ansem, really great follow over on Twitter. Fed is now stuck between fighting inflation by continuing to raise rates or pausing due to stress the higher rates are putting on the system, i.e. rock and a hard place. He says, as an inflation hedge and provably scarce digital store of value, the narrative for Bitcoin is very strong here as the cracks show in the traditional banking system. Whether the Fed decides to break things further or pause and accept higher inflation, it'll be telling how Bitcoin trades with gold, both of those mimicking each other at this moment in time. BTC has printed a higher low at a pullback of monthly demand and then immediately ripped to the top of the range. That is the zone in here that he's charted out, and then the daily support towards the top of that range there. His bias is that if we can get a closure above this range here, especially on a monthly candle, we are looking towards that 30K region, and this could be set up by the CPI figures. If they come in softer, there's an expectation almost that this area could be cracked, and that could be the catalyst to get us above here. Furthermore, to the flip side, if we get a hotter CPI print that I think both Bitcoin and ETH reject from the range highs, and we continue to chop in the range. Similar setup on Ethereum, he states as well, with 1700 being the target range you want to be closing above, but there will be some short-term selling pressure around the Shanghai release. With Ethereum becoming withdrawable from that beacon chain, there could be some pressure to the downside in the short term for ETH, and this could mean the ETH BTC ratio gets a bit of a sell-off, but he expects it to rally at a later date yet again. And his personal opinion here, base case, the lows from over the weekend with the fears of the bank run, contagion, and the USDC depeg will not get touched for a while. We have gone through a pretty catastrophic event there, and so it would make sense that if we don't have another black swan event, that we don't go back to those kind of low ranges. And he sees Bitcoin breaking out with strong alts and ETH following, and ETH BTC lagging, but eventually getting market confirmation across the board. Overall sentiment bearish with concerns over the macro backdrop and the recession. He doesn't think we'll get a clean retest if the range highs break once people start chasing aggressively. So a breakout could see some quick continuation as we get sidelined investors bidding in a bit of a panic there. But as we finish here on the Bitcoin dominance chart, you can see it has been ripping up over the last few days here, showing us that it is a Bitcoin driven rally here and people moving to that safe haven of BTC. So in all likelihood, unless you're in very strong altcoins, they may well be doing okay on USD pairings, but likely selling off in Bitcoin terms. This is one of the strongest narrative periods we've ever had for Bitcoin, with eerily similar circumstances as to when Bitcoin was created in 2008, with the banks receiving a bailout yet again. So all eyes on the prize for today's CPI print and how that will affect the wider markets. We're seeing crypto up, stocks down, DXY down, and gold up as well. Drop me a comment down below. Do you think we're going to come in hot or softer for the CPI print today? I'll see you in the next one. Peace.